Hello, it's Connie from Prosperity Finance. How are you? My goal is to give you timely insights and tips to help you master the game of finance and ultimately help you achieve your goal. Last week, I shared with you some pros and cons of buying commercial property because a lot of people are considering investing in commercial property. Now, this week, I will continue this topic and I will cover some of the area you need to consider if you are looking to purchase commercial property so that it will help you to make a good purchase and I'll help you to get your finance sorted smoothly. So what are the areas that you need to consider if you're looking to buy commercial property? The number one rule is location. Same as buying a residential property, location is the most important factor. If you buy in a good area, that helps you to minimize the asset risk. The number two tips is the building type. Not every building is equal. Some buildings are purposely built, such as daycare or petrol station, swimming school, or motel hotels. If you have one of these commercial property, think about who would be your potential buyer when you're ready to sell, or who would be your tenants. Are there a lot of options, or are they very narrow? The more narrow, the less the demand, and the more risk, obviously. And even with the generic building types, you also need to think about it. Who would be your potential tenants or buyer? Let's compare retail or offices versus industrial property like factory or warehouse. What are the most popular type of building, especially after COVID? It's really obvious, right? A lot of offices, like I said in the last video, are empty now. So if you invest in these type of offices, you probably get very short lease, or the tenants probably do not need much space anymore. Versus industrial or warehouse type of property, they are in good demand. So building types is very important. Let's move on to tip number three. Number three is the IEP report. It's kind of a jargon. IEP stands for Initial Evaluation Procedure. So in another word, it's basically like earthquake rating report. It's a percentage compared against the new building standard. This came about after Christchurch earthquake. You probably remember some building kind of actually damaged during the earthquake, and a lot of people died as a result. So the commercial building standards is getting really important when it comes to purchase, and also very important for the lender to lend you the money to purchase that type of property. Now, I live in New Zealand in Auckland. I remember a few years back, Linmore, which is close to my home, it used to have Westpac and ANZ banks in the building, but because the rating doesn't reach the standard that the bank policy, so they basically stopped renting the place. So ANZ completely exit the building. So as a landlord, potential landlord, it is important for you to understand what is the IEP for the building you're potentially buying. Also for the bank, the IEP ideally reach 67% or more. If slightly less than 67%, it doesn't mean it definitely can't be accepted, but you do need to have a plan and know the cost, how to bring it up to 67%. The minimum probably 33% in order to get a building insurance. So let's move on to the next one, which is the tenants. Now, with the tenants, what you need to be aware of, firstly, is what industry they are in. Are they in the declining industry? For example, retail. Because a lot of goods are sold online. So if they have a retail store, or a few years back, you probably remember there are some video stores. Now, it doesn't exist, right? So if your tenants are in the declining industry, the bank may have a concern. Because eventually they may not be able to pay the rent. And also look at the business itself. Even though the bank won't require a financial statement because it's confidential and the tenants won't give you that, but you need to look up their website and just see how long they've been trading for, what kind of business they are in, so just get idea how strong the business performance look like, because the bank will do that type of due diligence as well when they make assessment on your loan application. And also look at what is the concentration risk of the tenants. What I mean by that is, do you just have one single tenant, or you have multiple tenants in the building? If you just have one tenant, what if they leave? It's going to take ages to replace the tenants. Versus if you have multiple tenants in the building, if one leave, or if their business is now performing well, then at least you have other tenants, so it's not same level of risk as single tenants. So that's the concentration risk part in terms of your tenants. Now let's move on to the next point, which is very, very important, is the lease term. So if you look at the deed of lease, you will see the lease has a plus sign, sometimes a lot of plus sign. So the number after the plus sign, it basically means the tenants have the right to renew. For example, if the lease term says 3 + 3, that means after initial lease term of 3 years, the tenants have the right to renew for another 3 years. So basically, that's your tenants' rights. But there's no guarantee that they will renew. So the bank only look at the number before the plus sign. Now, normally this lease term need to be at least 3 years or more. If it's shorter than that, the bank not comfortable lend you the money because the tenants can leave the building, exit the building in a short period of time, right? So normally the bank will give you the loan term basically aligned with the lease term. So give them the kind of right to or opportunity to review your situation and see if they renew the lease, or if you have find a new tenant to replace the lease income. Otherwise, you may face the risk of repay the remaining loan, even though you still have 10 years to go. So with the commercial lending, you have the repayment term can be up to 15 years, but the loan term is only aligned to the lease finish dates. So it's really important that you are aware of the lease term, not after the plus sign. Let's talk about the next point, which is the yield. Now, one of the reasons people invest in commercial property is the higher yield. With commercial property, you probably expect yield between 5 to 6%. So if you see a commercial property and you know the asking price, you know the lease income, you can basically work out the yield and see if it's a fit in that kind of a band. Or you can use it in a different way. For example, if you know the rent, then you can work backwards to work out how much, what is the maximum purchase price you want to offer, so that you can stay in that yield range. Let's do an example. There's one single tenant, and they can pay you 50K a year. That's a gross rent, right? Now, bank allow 95% shading because there's very little cost of owning a commercial investment property. So basically, 50K times by 95%, so that's a net income of 47,500. And then you can divide by 5%, so that gives you 950K. So basically, that will be the maximum purchase that you want to offer. If they ask more than that, you probably need to think about twice. Okay, so yield is important and help you to work out the maximum purchase price. By the way, we have a simple calculator that you can download it. If you wait to the end of the video, we'll give you that link. So if you input the asking price or maximum purchase price you want to offer, and also the rent, then it will give you an idea what is the maximum borrowing capacity you can borrow from the bank. So stay to the end. Okay, next point is the loan-to-value ratio, LVR. So in my previous video, I talk about commercial property LVR can be up to 65%. But it's case by case. If you buy a purpose-built property like a daycare, you wouldn't expect 65% LVR, probably 50. Or if you have a single tenant, it will be less than 65% as well. So LVR is something that you need to be aware, and the bank will use the LVR to make a decision on your maximum borrowing capacity. The next point is the servicing ability. Just like a residential property purchase, the bank need to look at how much income you have in order to service the loan. Now, with a commercial investment property, they use a commercial income to evaluate your servicing ability. Now, bank use a kind of calculation called interest cover to work out the servicing ability. So how it works is that basically you use gross rent times by 95% to get the net rent. And then you divide by interest cost. How the interest cost is calculated? So basically use the loan amount times by 4.5%. Use that as kind of test rates and work out the annual interest. And then you use the net rental income divided by interest cost per year and see how many times. So if it's 2 times or more, then you can service this amount of loan. If less than 2%, then the bank may reduce your lending. So servicing ability and the LVR are the 2 most important factors when the bank calculated your borrowing capacity. So that pretty much the area that you would consider when it comes to buying commercial property. I also want to emphasize that it is very important that if you start looking to make an offer on particular commercial property, please engage with your solicitor and accountant as early as possible. Your solicitor will help you work out what condition you need, what kind of due diligence you need to do. With accountant, they will help you figure out the best ownership options. And also, I just want to let you know that once you purchase the commercial property, it's not the end of it. The bank will have a kind of ongoing requirements. For example, if your LVR is over 50%, then they would require every couple of years you need to do a register valuation so that the bank know the value of the property. If it's less than 50%, there's a higher chance that bank can waive that requirements. Also, they want to know the tenancy schedule and make sure your tenants are still in place. So it gives them a kind of an early warning if your tenants leave. So tenants schedule is very important. It is part of an ongoing requirement from the bank. I also want to remind people, if you plan to use the commercial property for your own business, if you are buying the commercial property for your own business, the loan-to-value ratio LVR can be over 65%. Because basically, if your business performance is really strong, the bank happy to lend you more. Basically, the 65% is a secured lending against the commercial property. They can allow interest only on this part of the loan. And then they lend you up to 35%, and you have to repay the loan within up to 5 years. This part of a loan will be unsecured loan, so the interest rate will be higher, but at least you don't need to come up with any cash deposit. So it is possible to borrow 100% of the purchase price if you're using for your own business, and this is how it works. But your business must be trading at least 2 years or plus, because you are your own tenants. The bank lends you a very high percentage of lending. If your business only trading for a year, it's just huge risk for them to lend you that money. So at least trading for 2 years, and you can demonstrate your business doing really, really well. Okay, so I hope this video gave you some kind of insights when it comes to purchasing a commercial property. We also talked about what is the borrowing capacity if you know the purchase price and the rental income. And please don't forget to download this calculator that will help you quickly work out your borrowing capacity. This is just indicative. So if you do have a commercial property you're looking to buy, it's best to get in touch with us so we can help you get a personalized solution. Thank you so much for watching. I will see you next time. Take care. Bye-bye.